Azad, thank you so much for being here this morning. Hadley kind of ran down what's going on, how we got to where we are, and at least some of the consequences. But truly, when you're looking at the world global oil supply and to see numbers like we're seeing today, down 20, 21, 22% for the price of oil, what are the global consequences of a plunge like this?
Well, to be frank, this is the perfect and probably the best form of stimulus for the global economy we could have asked for. No central bank cutting rates or introducing quantitative easing could have really provided such a stimulative boost. Now, of course, this is all very negative for investors and for markets, especially in the near term. But this is fantastic news for the consumers of global energy worldwide.
But can the consumers really consume enough to offset the negative impacts of seeing oil prices crater like this?
Well, it's not about that. It's about reducing home energy costs, reducing the cost of transportation. For the airline industry, for example, this is a fantastic boost at a time when demand is obviously very, very weak. Now, we don't know how long this disagreement between OPEC members is going to last. Is it going to last as long as the coronavirus outbreak does? We don't know at this stage, but I still think this is a very helpful form of stimulus for the global economy.
But then you're looking at some of these oil companies that have an awful lot of debt and really need the price of oil to be higher than this, frankly, to have their business moving forward at a profitable clip. I mean, isn't that potentially a very dangerous ripple effect of seeing prices fall and fall so quickly?
Absolutely, and I'm sure later today when U.S. markets open, we will see high yield spreads broaden out quite a bit in response to potentially higher default risks. But we don't know how long this will last. We know that we're seeing a market that clearly is missing a great deal of demand, and fears over global demand more generally are rife at this stage. So clearly today's price is not going to be the clearing price in a few months' time when demand gets back to normal.
So we have an awful lot going on. Of course, this oil news is sort of front and center just based on the timeline of what's been happening over the last, say, 24 hours. But of course, we have the coronavirus, which is continuing to add up the number of cases worldwide, particularly here in the U.S. You're watching the yield on the 10-year and the 30-year fall, frankly, to levels we have never seen before. As you look at the global economies, and if you are Chairman Powell, what do you think he should be thinking, and what should the central bank be doing going forward here to help support the U.S. economy?
Well, Chairman Powell and the rest of the Federal Reserve will be very aware that the market is still pricing in more interest rate cuts later this year, potentially also a new form of quantitative easing as well, potentially. And what he has to do is take make a judgment on how significant this hit to demand will be and whether it's going to be temporary or permanent. Because if the economy, the global economy, rebounds very quickly, say by the summer, are they about to undo a lot of the easing that's currently, that they've already started and could carry on with? I don't think so. This is going to remain for quite some time.
Right.
And the risk is that they end up overdoing it and causing an overheating situation further down the road. But of course, today we're more focused on weak demand.